Hey guys, welcome back to the channel. McNallie Money, the official home of power analysis. A tough day in the markets with Bitcoin retreating back under $70,000 USD. We're going to be covering that in addition to some key headlines that dropped this week in relation to your favorite miners / HPC AI players. Before we get into it, take a second, smash the like button, guys. It's a big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about Bitcoin and your top pick in the space currently. With that being said, let's get into today's episode. All right, guys, another week is coming close to an end. We're Thursday afternoon here, one full day of trading left. It's been an interesting week, kind of the opposite of what we saw last week in terms of strength in Bitcoin. We've got a number of headlines or updates we wanted to discuss in today's episode and some upcoming earnings and earnings interviews that we're looking very forward to, including Bitfarms / Keel Infrastructure. So before that, Anthony, Bitcoin itself, we've elected to show a 1-month chart this time around. You can see despite the short-term volatility, the pain we've been talking about in terms of above or below this $70,000 line, if you zoom out to a 30-day view, still showing some strength.
Yeah, and this goes back to probably when we were in New York, actually, and you can see that chart there from a monthly showing obviously 64,000 as a low there. But since that point in time, just over 3 weeks ago, you're seeing sort of higher highs and higher lows. And it gives more impression that the Bitcoin price is, slowly but surely maybe going in the right direction. If you look at it too much on a daily basis, it's too volatile, too choppy, and therefore can give you the wrong impression. It's nice just to zoom out a little bit and see what's happening. And we were even looking at the sort of like the maximum position there just to see the correlation with the previous period, the previous cycle, and to see if there was any similarities. And there are similarities with all the cycles in terms of reaching a top and then the potential to reach that top again before the bear cycle kicks in. Now you can argue we still might have another top to reach in this cycle, or you could argue that we're already in the bear cycle and about to move out into this growth cycle upwards. So as I say, we'll monitor it. We give you the updates on a daily basis during the week, and let you decide how you want to figure out the Bitcoin price, because it's challenging and not many people get it right all the time, and that includes us as well. Hence, we don't try to give any predictions on Bitcoin. We let all the analysts, and we're happy to sit there and listen to them, and we'll highlight what they say. And then maybe we get the opportunity to interview them in a period in the future when we can go back and look at that estimate there. But believe you me, the challenge in 2025, with all those big names indicating Bitcoin was going to reach 180 to 250,000 by the end of 2025, that didn't quite occur. And so I think there's less people coming out there with these shorter time periods for growth, but we're still seeing some really, really big numbers applied to future dates in the future, not just in the short-term future.
Yeah, we've seen a number of estimates now for 2030, 2035. So maybe the experts have learned their lesson. They're pushing the duration out a little bit there. I actually had lunch with one of our subscribers yesterday, Anthony, a gentleman by the name of Chris. He was stating he thinks Bitcoin is going lower into that $58,000 range. And interestingly enough, we talked a lot about Hive. He's a big trader of Hive and a long-term investor of that company as well. So always great to connect. Now, speaking of the miners, a difficult day for them as well. Red across the board. Not even a single miner is bucking the trend at this point in time. We've got a couple of interesting standouts. Mara holding up relatively well. On the other end of things, we've got DMG, which we'll talk about in a second here, and surprisingly, IREN.
Yeah, one thing I will say is, when I started looking at stocks in this space, 5, 6 years ago, the volatility of mining stock compared to the volatility of Bitcoin was literally two different worlds. You could look at the volatility of Bitcoin itself, and it had a volatility of about 3%. So you could have those sort of swings on a sort of a daily basis. The volatility of the mining stocks was closer to 8%. What we're sort of seeing now, probably last 12 months, is we're seeing that volatility reduce in terms of the mining stocks. We're not seeing, a direct correlation with Bitcoin. If Bitcoin price is coming down, 2 or 3%, you'd expect the mining stocks to really be coming down significantly. We're actually seeing, the likes of Mara, which is, at the moment still is a Bitcoin mining stock with one of the largest hash rates out there, and it's showing parity. There could be a number of reasons for that there, but in previous years, if the Bitcoin price had dropped, you'd have seen some of these stocks drop double digits and more from where we've seen the Bitcoin price fall today. And we're not sort of seeing that. So whether this impact of the HPC strategy is giving some of these companies a little bit more credibility from the market perspective, they're not getting battered as much there, because we know that once them revenues start coming in from HPC, and even a few of these companies now have actually announced they're no longer going to be mining in the next couple of years. Once the HPC is installed and switched on, they'll be looking to switch off miners and maybe just sell their fleet to potential buyers in the space, and focusing all their energy on delivering something that there is a scarcity of, and that's high performance compute. But as I say, I'm not paying too much attention on a day-to-day basis of stocks there. One positive note today, I did have a buy order in for Riot, and that sort of triggered earlier today when the price came down, and I thought I missed about a couple of days ago as the share price went a couple of dollars higher than my buy price, but believe it or not, it actually triggered today, and then currently sitting above that buy price at the moment, so in profit. But as I say, this is one day. Let's try to zoom out a little bit more on the miners and talk more about what we see for the future rather than on a daily basis.
I like the glass half full strategy today, Anthony. Take advantage of the dip here. And it's interesting, we talk a lot about this miner re-rate, the potential to go from maybe a 2 or 3x or times earnings up to a 20, a 25x. The miners are all in some portion of that transition, but I think you're right. Even the mention of HPC AI has helped stabilize the share price in light of some of the Bitcoin moves here. So good call out there, Anthony. If we move over to the heat map, I guess the big call out now, just a few days ago, we were reporting all 5 sectors in the positive, now 4 out of 5 in the negative. So again, interesting to see how these stocks trade on a day-to-day basis.
Yeah, a lot more red on the board there, and this last few days with sort of consistent drops this week in Bitcoin mining stock prices, you're seeing far more red there. You can look at the 5-day change, and there are a couple of green shoots there, Bitdeer and Bitfarms, Cipher, TeraWulf, but the majority in the red there. I mean, Wi-Fi, we'll cover Wi-Fi in a second. They're down 13% just in the 5-day period. Even IREN, the biggest stock, are down a couple of percent there. From the 1-month change, Wi-Fi also, down 21%, and Soluna down 15%. We talk about Soluna a lot because that share price does tend to yo-yo quite a bit. And I think people, are asking questions constantly. We did a recent Ask Me Anything podcast with John Bellas there, which, if you don't know too much about Soluna, I suggest you go and watch that as part of your due diligence, because not many do that. I remember 6 years ago, one CEO doing something different. That was Peter Wall with ARGO Blockchain, and he was doing his own podcast in them days. Really strong communicator in the space. But sadly, ARGO Blockchain no longer really operating anything like where they were operating as one of the sort of the biggest miners back in 2021. They had a market cap of over £1.5 billion at one point in 2021. Within about a year of that date, sadly, they'd already sold their flagship site, Helios, which is now believed to be worth multi millions of dollars. And GLXY have even stated it's probably the best investment they've ever had since their existence. Mike Novogratz mentioned it at a recent conference there. The return on that investment is going to be significant. They've already got a big deal with CoreWeave. It's got the potential for a minimum of 800 megawatts at the moment, going to double that probably to 1.6 gigawatts. And they got it for a fraction of the value of that site as it sits at the moment. So a good buy by Galaxy. Obviously, at a point in time where maybe ARGO blockchain were thinking it was either sell the site or go through Chapter 11, and they took the route that they thought was the only one left available to them. So that's history. But Soluna, as I say, can be volatile. But do have a look at some of these podcasts with John. He's very, very open, transparent. Got a lot of things on the go, a lot of projects. And we've seen that market capitalization significantly lower in the last 12 months than it's showing today at around about $71 million.
Yeah, we certainly have. And that one, for whatever reason, a lot of volatility there, even compared to the rest of the herd. So one to watch for sure. Some interesting context. Yeah, Helios, the deal of the century, it seems, in terms of data centers. And unfortunately, Argo on the negative side of that trade. Now, BitFuFu, this is interesting. We've talked a lot about their cloud mining services as a real differentiator. You've brought up the fact that in terms of earnings, they're one of the most consistent, profitable companies in the space. This is really a strong accolade to support that. In 2026, the FinTech Breakthrough Award Program has recognized FUFU as the mining service provider of the year. Now, we've got an excerpt from the CEO here, but it really, I guess, is case in point what we've been talking about on the podcast. They've got a unique strategy, a great customer service team, and an ability to tap into a market that really a lot of their peers aren't even involved in.
Yeah, and bear in mind, BitFuFu, like Bitdeer, both have offices based in Singapore, and so really central to that Asian market over there. And both have been, utilizing this strategy, the cloud hash rate strategy, which enables retail investors to buy hash rate without having to buy and host the machines themselves and find infrastructure. So it's great to see the recognition given for this. They've won this Mining Service Provider of the Year. It's the 10th anniversary of these awards. And they've basically done it because they're effectively one of the world leader Bitcoin miners with operations across North America, South America, the Middle East, and Africa. One of the key things that does separate them out from peers is the fact that their mining fleet is one of the most efficient fleets. It currently averages 17.5 joules a terahash. Now, just to explain that to those that aren't familiar with what that means is, if you have a significant efficient fleet, and 17.5 is really good. I think the global average is probably around 30 joules a terahash. That would be some of the S19 machines. But if you've got some of the S21 machines in your fleet there, it certainly brings it down. IREN have the most efficient fleet of all the North American public miners. And bear in mind, the North American public miners probably account for something like 30% of all the hash rate out there. Theirs is 15. So 17.5 is literally a fraction away from that there. And by having that low efficiency enables them to mine Bitcoin using less energy. And if you're using less energy, you're paying less electricity bills. And that means that you're unable to get a better margin. So if you've got a low cost energy provider and you've got an efficient fleet, then for you it's a win-win. Because at the moment, and we'll come on to this later in the podcast, the challenge now is who's actually able to mine at a margin, irrespective of what your efficiency of your fleet is or your cost of energy. That's the challenge. Now, one thing that BitFuFu does offer, it offers a suite of services for both retail and institutional users. It offers this Bitcoin cloud mining. As I explained, that's where you can buy hash rate without having to buy all the infrastructure. You're effectively paying for the machines. The machines are being operated by BitFuFu on your behalf. You receive a revenue fee for that, and then you pay for the machine and you pay for the energy cost and a hosting margin as well. And so, as well as this cloud mining, they also operate miner hosting, equipment sales, miner software, and pool services. So you can see that very much integrated services around the mining business there. They do have significant operations around the world, I've already mentioned there, and they also have their eye on utilizing some of the power in those sites in the future to look at high performance compute as well. So not just wanting to stay in the mining business, but open to using some of that power to maybe bring in some more predictable revenues. But believe you me, when you're looking at predictability, all you have to do is go to BitFuFu's accounts, and you can get those from their website there, and look at the last sort of 3 or 4 of their quarterly reporting. Maybe even look at the last 7 or 8, because you'll find one thing that stands out from this company compared to even some of the best performers that we expect, that the likes of IREN and Cipher and Riot, in terms of having low cost energy, significant hash rate to deliver good revenues. They struggle to bring in profits in all them quarters. In fact, even IREN have had some net losses over the last few quarters, out of the past year. So it's a challenge. One thing BitFuFu they've had a lot of green quarters. And really, it's about the fact is the risk to them is less than the risk to other miners. When you're providing a service and your customers are paying you for that service, and they're taking the risk on sort of Bitcoin price, you're getting your fee irrespective. So that's one great thing about Cloud Hash Rate. It is a big part of their business. They have 650,000 customers, and delivering, a margin from each of those customers there. That's the sort of business model you want to be in, especially when the Bitcoin price is at the moment there, and being a challenge for all the other miners trying to deliver margins with their self-mining operations as we sit.
Yeah, I'm surprised there's actually not more people involved in this cloud mining operation. And as you say, again, provide some insulation from the Bitcoin price. So nice to see that working out, and nice to see BitFuFu getting recognized for that business model. Now, the next portion here, kind of an interesting one, talking about HODL strategy, case in point, Mara. So in Q4, they just posted this on their Twitter today. This was the first quarter they've actually not used the ATM since 2022. Now, we know the ATM has been a big part of a lot of these companies' growth strategy. IREN used it very successfully. Riot, Mara obviously has opted now to start selling some of their production to offset costs. Now, in addition to that, they also came out with a comment in their last earnings update talking about the ability of the company to now sell strategically based on the company's needs in terms of their HODL. So I wanted to unpack this a little bit. We've got some comments from Rob Samuels as well, but what is your thoughts on the ATM, which we've just seen IREN actually launch a $6 billion ATM program, versus selling your HODL if you're in Mara's position?
Yeah, this is the sort of like the double-edged sword here, and I remember Mara and Riot were the 2 first American miners to go public on the Nasdaq, and they had that early movement, on receiving a lot of capital through the Nasdaq there, in terms of US shareholders could buy a US company effectively. Most of the original mining companies were all Canadian, and so once Mara and Riot listed, they were attracting significant volumes of shares being sold, raising lots of capital. They weren't going out and buying 5 or 10,000 machines. They were going out and buying 30 or 50,000 machines. And both of those companies managed to raise, especially Mara, managed to raise their hash rate significantly. There was in the early days, they were, smaller than the likes of Bitfarms and Hive Digital and some of the other miners, and it's only when they list on the Nasdaq that all that capital came in, they utilized it, they sold all the shares on a regular basis, they grew and grew and grew. they're currently at, have one of the highest hash rates of all the public miners there. I think Bitdeers may have just gone ahead of them again with their recent update. They've got something like 80 exahash under management. Mara have probably, well over 60 exahash, probably edging towards 70 exahash there. So really, really big company from my perspective. But they've also now looked at how they're going to utilize that money in HPC. And by saying they're not going to use the ATM, that will be positive for shareholders because using the ATM, you're diluting the stock there. So everyone's share of the company gradually gets reduced as more of the ATMs used. I will say, selling the Bitcoin, people can look at this in a positive way. I mean, people gave a lot of stick towards IREN and the likes of TeraWulf. I remember, for the last 3 or 4 years, selling their production on a daily basis. Nobody's given them stick now. I mean, they sat there in terms of market capitalization, the top 2 companies out of the ones that we regularly talk about. And, Mara in 2025 held that post on its own there, higher than every other stock. That's dropped down the table a little bit there. So maybe a sort of like a change in the approach here. They do have the second largest HODL of any public listed company behind strategy, with at the last earnings update highlighted they had just under 54,000 Bitcoin. Now, it's not suggesting they're going to sell all this 54,000 Bitcoin. What it's saying is before this year, they'd already announced that they were going to start selling some of their production. They went for years without selling any production and effectively just using the ATM to manage operational costs, never mind capital growth. Now they've been using some of the production to pay for their operational costs. And as we've seen the last year or so, it's a challenging environment. Your energy costs, your staffing costs. These companies aren't bringing in profits on a regular basis, so you're going to have to meet those costs, each quarter. So they've been using that. But what they're saying now is, opportunity arises. They're going to be able to use Bitcoin on the balance sheet to give them some, to meet opportunity far more quicker than going to the markets and borrowing or going to the markets and then announcing they're going to have an ATM, etc. So it gives them another lever to pull. As I say, the critics won't like it, but actually, many investors will probably think, you know what, IREN don't keep any of their Bitcoin, and their valuation today is probably $13 to $14 billion. And a lot of people will be thinking, if only Mara was in that sort of position where they could, lead their own direction without having to go from their position of, maybe about a quarter of that market capitalization. That's the challenge that, effectively smaller companies face now. They have to use all the levers to get there. And the likes of IREN and TeraWulf don't have to. They can use less levers and still get to that position because they've grown quickly and got into a position of strength from a balance sheet perspective. But I think it's a positive thing. We want to see more updates from Mara, what they're going to use for that Bitcoin, and if they're going to sell it, where's the growth coming from? Are they going to announce any deals? What we don't maybe want to see is growth in Bitcoin mining, because as we're going to highlight in a second with regards to the current hash price, that's proven to be a challenging environment for any miner. And the market's quite like miners that are tapped into some of these co-location or CSP deals, as you can see from the fact that there's probably now 5 or 6 miners ahead of Mara in terms of size, because they are changing their strategy away from mining.
You're right there. Yeah, it's really shifted a lot over the last 18 months. Now, Jacob King put out an original post about this change in strategy. You can see the zoomed in version here, talking about we expect to continue to monetize Bitcoin opportunistically to enhance our financial flexibility, including providing liquidity or to fund capital projects. Now, Rob Samuels, head of IR, he pushed back and said, hey, by no means are we looking to sell all of our HODL. This is just another lever to use. I wanted to ask you a question about the word opportunistically here. We've seen Mara hold their HODL through the highs of this last cycle, 126. Now they're deciding to potentially tap into that. In terms of the opportunistically side here, do you think the timing is right?
That's always a challenge. Remember in 2022, we had the what was expected to be, continued bull cycle. We saw the Bitcoin price turn the other way, and we'd even seen miners in early 2022 buying Bitcoin to add to their balance sheet because they expected an increase there. Bitcoin didn't do that all the way through 2022. It dropped in value, finishing at around about $15,000 or $16,000. Now, a lot of miners didn't sell when it was $40,000 or $50,000. Remember, it was an all-time high in that period at 69,000 towards the end of 2021. People thought it were invincible and didn't sell the Bitcoin, apart from the likes of TeraWulf and the likes of IREN, who literally selling on a daily basis and getting the benefit of that. And if you think about those companies all the way through 2024, 2025, as the Bitcoin price started to rally every day, they were selling, on a daily basis and took advantage of the price when it got to $126,000 back in October. And yes, they're still selling today at today's price, but they've managed to benefit all the way through those peaks. As I say, if we're going to use this money from selling Bitcoin to grow the company and grow it quickly, then I don't have an issue. I mean, selling it for selling stake and not going to get that return on it. I mean, there's an expectation, maybe not this year, but in the next few years, we'll see Bitcoin break through to another all-time high. Is that not an opportunity to see that? I think that was always their strategy, the expectation that Bitcoin would continue to grow. And as the adoption of the ETFs, 2 years ago, we can see the fact that Bitcoin has been reached that more and more adoption. Still not quite there yet. We still need to grow more adoption. But 50 million Americans hold some sort of crypto. That should tell you something. We won't have the Middle East wars for the next 4 or 5 years. Hopefully, that will be brought down to a more manageable position in the coming weeks. But I think Bitcoin's got a long way to go this year in terms of on an upward trajectory. I just hope if they're going to sell it, they're going to utilize it for growth in a strategy that's going to show a really good return for shareholders.
It's a good point. Yeah, not only is there opportunity cost in terms of the price of Bitcoin, but a lot of those companies you just mentioned put that money to work in terms of advancing their AI strategy. Now, that's kind of a nice segue into this table, HODL percent market cap. Yesterday, we talked about the number of sats per $1 invested, and you pointed out that currently Mara, you can actually invest $1 there, get more Satoshis than if you just bought Bitcoin. This obviously is validated on this table. You can see trading at a discount to Bitcoin, or essentially 110% of their market cap represented by their HODL. However, it points or paints kind of the other side of the coin here. Mara and a lot of these companies have held a large amount of Bitcoin for years and years, and we haven't seen them get any sort of appreciation for it. So to the selling side, maybe what's the value of holding it if you're not getting any recognition?
Yeah, it's a great point. I mean, I suppose that you have a belief. I think Michael Saylor is still one of those speakers out there that believes Bitcoin's going to get to a minimum of $1 million, and if he gets to hold 10% of it in his company, then the expectation is it could get to $50 million. So he's very bullish. He hasn't sold any Bitcoin. He's just relentlessly buying it. And he's now got a tool that enables him to buy it on a regular basis without impacting the company effectively. So he's managed to work that out there. And we've seen other companies are going to start following that same strategy, to coin a phrase, and deliver the same for themselves there. So there's going to be a lot of companies buying Bitcoin. Remember, the purchase of Bitcoin, even from strategy alone, are buying more Bitcoin than can possibly be produced. Only 450 gets produced in a day. They went and bought 22,000 last week. That's probably 6 or 7 times more than the weekly production level in one week, and that's not sustainable. They're going to have to look elsewhere from production And we know that some of the miners don't sell all their production. So that's assuming they were able to be able to purchase every Bitcoin from production. They're going to have to start getting people to sell Bitcoin to them. And maybe some people are making it a bit easier at the moment. But once that sort of stops, then you're going to have to offer a higher price to buy Bitcoin. And then the economics of the price volatility dependent on the fact that demand will outstretch supply, and it is already, because we're already seeing Sailor alone, and that's just one entity buying. We haven't even talked about BlackRock, and they're buying Bitcoin probably just as quickly as Strategy are.
Yeah, good point you bring up there. The other highlight we wanted to talk about here, Bit Digital, they stand out in the sense that they're the only one to hold Ethereum on their treasury. You can see again a large percent of their market cap made up by that HODL. And the interesting one here, we just heard out from Wi-Fi or White Fiber, they're expecting earnings this month. Bit Digital holds a large percentage of that company as well. So this one, again, when you start putting the two pieces of the puzzle together, a 1 + 1 not necessarily equaling 2.
Yeah, this is one I'm really looking forward to. And the reason I'm looking forward to White Fiber's results is this is just a pure play HPC company. So, all their revenues are going to be what they're earning from their effectively 23 clients at the moment. And we've covered the fact that what they're doing on their flagship N-scale site at the moment, and that's going to deliver about $85 million per annum for the next 10 years when that gets energized. So I'm really looking forward to seeing it. Also, it gives an indication now, because they've now sort of settled into their strategy, the level of profits, level of margins that the company should be delivering. Because believe you me, they should be delivering profits. I can't see any reason for a net loss from their earnings, especially the fact that they're not aligned to the volatility of Bitcoin. They're aligned to the fact that people are in their droves trying to buy compute from providers such as White Fiber, and the number of clients has just escalated since we started really talking about them when they had that one big client, that 50 million of annualized revenue a year. I'd be very interested to see what the annual revenue now is for the company a couple of years later. So I'm really looking forward to that. Hopefully we can get Sam Tabar on the podcast to talk us through that, to talk us through what's happening next, what's happening after N scale 1, and also that, are they looking for other sites in the area? They've found some absolute golden nuggets in terms of facilities that they've managed to refurbish without having to go and break the bank to do that, and then start delivering their HPC strategy. Maybe they've got the Midas touch, and maybe the gold period for them will be from now on for the next few years, and it'd be interesting to see from their earnings, is that going to be materializing?
It's going to be really interesting. Like you say, no exposure to Bitcoin or Bitcoin mining, a pure play AI HPC company. And the other interesting angle here, Sam Tabar mentioned that Bit Digital is actually locking up their shares, I think 74% of White Fiber for all of 2026. So when you think about the number of shares that are actually available or outstanding to trade, that's definitely one we're watching going into earnings again, March 26, 9 a.m. Eastern. So before market open for White Fiber, that's going to be Q4 and full year 2025. Now, the final piece today, we wanted to talk about an update on DMG Blockchain Solutions. We just broke news a few days ago that they received their first 1 megawatt SCIF at their Christina Lake site. It was going through customs. It's now arrived. This is going to be the first component of their data center build out or proof of concept. Now they've got their second set on site there. So you can see things progressing quickly. We just had Sheldon and Steve on the channel, and they actually said Malahat was pushing this forward faster than they could keep up with.
Yeah, you're quite right. The second skiff has arrived, crossed the border, and now at the Christina Lake site there. And thanks to a team that put in an extra long day, they've managed to get these monster units in position and ready to start dealing with that new strategy. This will be great for DMG in terms of that test and see concept we see many of the miners do. Remember, the likes of TeraWulf, they created the Wulf Den. Bitdeer had their test and see site in Singapore. That's now moved and grown another site in Malaysia. So, companies like this that have been Bitcoin mining for quite a while, it's not just a case of we can just switch into HPC. You want to prove that you can deliver this concept. And I think DMG are going about it the right way there. They've got a great partner with the Malahat, and the aim is to effectively get Christina Lake, and you see that they've already received 2 of these gifts. That's 2 megawatts, and there's an additional 13 megawatts to go. That takes you to 15 megawatts. Then allow potentially another couple of megawatts as ancillary power based on the PUE. But being in sort of like in Canada, you're not going to have those PUEs of 1.4, 1.45 that we see in Texas. It's going to be closer to the industry norm, which is about 1.1. So if we allow a couple of megawatts, that's slightly higher than the norm. That gets you to 17. They're still going to have the best part of effectively 58 megawatts left to play in terms of some sort of a co-location deal, and that could give you a significant co-location. That still could provide a 50 megawatt co-location HPC compute deal and have sufficient power to support it at the site itself. So, going down this route now, they'll maintain their mining operation as they're building this site with these SCIF units going into place. And then obviously once they're ready then to sort of like maybe go to the next level and sign a co-location deal, dependent on that co-location deal, may be able to open more doors for in terms of raising capital, or they get a significant partner like we've seen the likes of Soluna Holdings do with their projects. If you haven't got the capital ability, or you're a size that can't generate that level of capital, maybe there's a partner out there and you go through that process to grow. And then once you get to a position when you can repay back, then you then take the majority of the profits coming through there. And I think there's plenty of opportunity. It's a more predictable market than we've talked about in Bitcoin mining. That's the challenge. This is the way forward, and it's nice to see a DMG starting to see these units arrive. And let's hope it's not too long before we see them energized.
Yeah, agreed. And we haven't heard officially the off-taker for these specific units, but we do believe it is Malahat related. We know that they have this joint partnership, 15 megawatts at both of these locations, the other 15 on the Malahat Nation on Vancouver Island. We know DMG said Christina Lake would be the first site to energize, and we know that they said they're obviously pushing that relationship forward quickly. So Sheldon does say press release coming soon. We'll stay tuned there. The final piece we wanted to hit on, you mentioned earlier, hash price, slightly above $30. One ray of hope here, I guess, for the miners, a 7% plus difficulty adjustment reduction expected for tomorrow.
Yeah, that reduction's coming along tomorrow, because the average block time at the moment's taking 10 minutes and 47 seconds. That's an extra 47 seconds longer than it should do. So when the block time takes longer, the difficulty adjustment makes it that slightly bit easier for miners to achieve, and then hopefully it then averages back to 10 minutes. And we see this difficulty adjustment occur every 2 weeks. Now, the other noticeable thing that we've seen, apart from the fact that the hash price is still around $30, I'm not sure how much margin, many of the miners are making out of this. You'd have to have really good efficiency, somewhere along the lines of where we explain BitFuFu at the moment, 17.5. So that's good efficiency. And if you've got lower than that, which only probably 2 or 3 miners have, they're also probably okay. But at the same time, you've got to have a really low power cost. We were saying the same thing when it was $40. And we said that, the power cost had to be, to be low. And bear in mind what's happening at the moment, Bryce. We've got 2 wars around the world, one of which is in an area where it significantly impacts the oil price. We've seen that increase. It cost me 30% more to fill my car the other day, and this is only about 12 days after the war started, not three or 4 months where you'd expect current reserve to be utilized before they started tapping into the higher rates of fuel. I'm already seeing it hit now, And what will that impact on sort of energy costs in the UK at the moment? They're already talking about the vulnerable are going to find it really difficult, and are the government going to step in like they did before? During the last time that we saw gas prices increase significantly globally, a lot of countries had to step in and help vulnerable people, and they're already talking about that now. What's that going to have on as an impact to the electricity cost or the energy cost wherever these machines are located around the world to try and achieve some sort of margin from Bitcoin mining price?
And another good point there, Iran also known for Bitcoin mining activity. So not only impacting global oil prices, but also network impact there. You can see around 930 exahash globally. So a little bit lower than we've traditionally seen, but some good discussion today, you guys. We'd be interested to hear your thoughts in terms of where Bitcoin price is going. Wi-Fi earnings. We've also got BitFuFu earnings out tomorrow, so a number of high-profile updates, and of course, Bitfarms end of the month, March 31st. We've got Ben Gagnon on the program the very next day, April 1st, which also happens to be the Keel Infrastructure rebrand day. So a very exciting interview to look forward to. We'll see you guys back here tomorrow. Thanks for watching, and we'll see you soon.